Hello, everyone. Welcome to episode 5. Today, we're going to be talking about the next market phase or price phase, expansion. Now, you can remember this diagram representing the four market cycles. Price will either be doing either of these four things. Price will either be consolidating, expanding, retracing, or reversing. This is how price is delivered. There's no other way price is delivered. And I explained to you that after consolidation, what we expect is expansion. Nothing else. You don't expect retracement after consolidation, neither do you expect reversal after consolidation. The next thing you expect after consolidation is expansion. And from expansion, we can get either of these three things. All right. So today we're going to be dealing with expansion, explaining how it looks, its characteristics, and how you can use it for a trade setup. Now, what is expansion? Expansion is a quick movement of price away from equilibrium, or you can say consolidation. Now, usually to an area of liquidity. So you can see here how price consolidated at this point, from this high to this low. And you can see this quick movement away from this consolidation or equilibrium, because if you measure from this high to this low, we have equilibrium at this point. And then we explained in the last video how price consolidates at the equilibrium. So if you take this range high and this range low, when you draw the midpoint, you will have equilibrium. And you can see how price was moving around the area of equilibrium. So expansion is a quick movement away from equilibrium. It's that simple. So here's another example. Here is a bearish expansion. That's expansion going lower. So we can see here how price consolidated, creating an equilibrium. So price moving away from equilibrium or consolidation is what we refer to as expansion. When price leaves a level quickly, it indicates a willingness on the part of the market makers to review their intended repricing model. So whenever you see price move in a certain direction, it is indicating the likely direction the market makers want to move the market or expand the market towards. Now, I need you to understand, like I said in the first video, that we cannot move the market as retail traders. Those who can move the market are the big boys. They are the big players. So whenever you see market move with such momentum and velocity in a certain direction, it is telling you the likely direction price wants to go. So if you see price consolidate and then expand away lower from this consolidation or equilibrium, what is being reviewed is the intended repricing model of the market maker. So when we see this, we want to trade in that direction. So therefore, you always want to wait for the first expansion. That will give you all the insights you need to make a decision. So we don't chase expansion. Many times when I was a young trader, whenever I see price moving with speed and huge momentum, I try to enter. Usually I get caught up in that move because price has moved away from where my stop loss should be. So what happens? I try to compensate for that move to move my stop closer to my entry point. And we always know the story. Price always take my stop to continue rallying higher. I don't know if you understand what I mean. Let's say price consolidates at this point and then rallies higher. So when I see this, I want to trade this move because I think, oh, price is moving now. Let me join this market move. So if price at this point, you know that to put my stop here, I'll be gaining less. So just to in order to increase my lot size, I'll try to put my stop here. And price usually returns back to take my stops and then continue going higher. So the whole message is do not chase expansion. Do not chase it. Allow the market to tell you where price wants to go. Many of the time you look at the market consolidating, you are trying to guess, is it going to go up? Is it going to go high? You don't need to do all those things. You want to wait for price to break out first. And once it breaks out, the direction at which it breaks towards is telling you where market is likely to go. So if it breaks higher, it's telling you that price wants to go bullish. Breaks lower, telling you that price wants to go bearish. It's that simple. Now let's study this price action. So these places are marked with a gray box, represent price consolidation. You can see them here. And here represent market liquidity. All right. So now you could see that price was consolidating at this point. And then it broke out. Let's assume this is a daily time frame. So now once you see this break out of this consolidation, it is telling that price wants to go bullish. So every day you want to be buying. All right, let's look at this section here. As soon as price breaks out from this consolidation, although we see a tiny retracement back into this consolidation, there's a price void here. You can see how price rallied and then continued rallying. So we can see another example here again. Price consolidated and then it broke lower. As soon as it broke lower, what happened? It retraced and the price began falling. Another consolidation, price fell, consolidation, it broke out lower, price did what? Fell. So this will be explained when we talk about reversal. But let's move on. Now, to know what direction price is likely to expand to, you ask yourself these two questions. One, from what direction is price coming from? Period to price consolidation. Two, what clear liquidity is price most likely reaching for? Now, remember I said, when price is consolidating, don't try to take a trade. Don't try to pick, is it going to go up or go down? Let me buy or sell. Don't do that. You want to wait for price to break up from that consolidation. And if it breaks upwards, it's saying that price wants to go higher. And if it breaks lower from the consolidation, it's saying that price wants to go lower. Now, not all the time, but this is a telltale sign pointing the likely direction price is likely to go. Now, before price also breaks out from a consolidation, there's a way we can tell. Now, you can see I listed them out here, and these are the two questions you want to ask yourself. From what direction price is coming from, and where is the clear liquidity you think price is reaching out for? So let's look at an example quickly. Now, you can see what happened here. As soon as price was consolidating, you want to ask yourself this question. Where was price coming from before this consolidation? Now, you can only apply this when price is consolidating. As you can see here, before this consolidation, price was bearish. That's the first question you want to ask yourself. What direction was price coming from prior to the consolidation? So price was bearish. Now, where is the clear liquidity do you think price is likely running towards? We have sell-side liquidity below this low. So what happens? We expect price to expand lower. Now, this explained here will be taught to you in the next videos to be released. I don't want you to concern yourself with how can I predict price? How can I tell where price is likely to go? No, I want to take it bit by bit, because there are a lot of things you need to know and understand in order to determine price direction. These videos I've been releasing so far are to set the foundational skill in order to determine bias. As you would know, we have 4 phases in price cycle, 4 ways at which price is delivered, and only these 4. Price will either be consolidating, expanding, reversing, or retracing. And if you can understand each of these phases and how price moves from one phase to another, it forms the basic skill in you in predicting bias. And mind you, you can't predict bias without liquidity. And that was why liquidity was explained in the very first video. So let's move on. So now, how can you use this for a trade setup? With each phase, a trade idea can be generated. And we do this by pairing each phase of the cycle with a reference point. Now, we pair consolidation with equilibrium. We expect consolidation at area of equilibrium. And as price is consolidating, it consolidates close to the area of equilibrium. Then we pair expansion with another block. All right. So what's another block? Because to be able to recognize this trade setup, we need to understand what an order block is. But in this video, I'm only going to be introducing another block. In the subsequent videos to be released, I'm going to be going more in depth into what another block is and how you can use it. So a bearish order block is the last up close or bullish candle before a down move. So before this down move here, we had what? This up close candle, this bullish candle before a down move. Usually we expect price to return to that candle and find resistance. So you can see how price fell lower. Then the reverse is the same for a bullish order block. A bullish order block is the last down close or bearish candle before an up move. So before this move, price created what? A down close candle, a bearish candle. So you can see how price rallied away from this candle and then returned to find support before rallying. All right. So how do we use the expansion and the order block? Like I said before, price always expand after consolidating. So you can see how price consolidated within this range. Before leaving this consolidation, it left what? An order block. And you can see how price returned back to this order block before rallying. And usually you'll find this order block near or at equilibrium where price consolidates. So this is how you combine an expansion with another block for a trade setup. I want to do the opposite for a down move. So here's a bullish market. You can see how price expanded higher. Before it expanded, it left what? A bullish order block. So what you want to do is you want to identify that bullish order block, extend it out, and wait for price to get back to it before rallying higher. So this is what gives you a trade setup. Just like I mentioned earlier, you do not want to chase price expansion. You want to wait after price expands. What does it give you? It gives you 2 things. 1, direction. 2, an opportunity to go in that direction. So with this, you don't need to chase price expansion anymore. You want to wait for price to return to the initial consolidation for you to take a trade. And because price has already expanded, the direction at which it expands towards is the direction you'll be taking for a trade. So if it expanded higher, you want to be taking a buy trade. If it expanded lower, you want to be taking a sell trade. Now, this gives clarity and high profitability, and it happens almost all the time. Another way to also look at it is you want to look for where you find expansion. Wherever there's an expansion in price action, go to where that expansion began, the origin of that expansion, and look for the order block. Once you've identified the order block, you outline this order block and wait for price to get back to it for a buy. The reverse is the same for a sell. Once price expands lower, you want to go to the origin. Where is that order block? You want to find that bearish order block. The last up close candle before this down move, expand it outwards like this and wait for price to rally towards that area before it sell. So what we are doing is we are pairing expansion with order blocks. So when you open your chart, when you see expansion, it all starts with expansion. When you see this quick movement in price, once you've identified the expansion, you want to go to the origin and identify the order block. All right, let's look at another example. Now look at this price action. Can you point out where you notice significant expansions? I'll give you a moment to do that. All right. Now you can see how price expanded lower. After taking out the buy side liquidity, what happened? It expanded lower. And you can see how price returned back to what? The last up. Now these are consecutively up close candles. It is also another block. So these up close candles, they are all bullish candles. If you draw out the line, you can see how price returned to it for a sell. Now, where else can you see a significant quick movement? Well, you can see one here, and price did not return to it. Now it happens. Now, price can expand from an area in price, either an equilibrium or consolidation, without returning back to it. It happens. You must not take all the trades. Now, where else do we see an expansion? You can see how price expanded higher. Before expanding, it left what? A bullish order block. Now you can see how price retraced lower to find support in that order block before rallying higher. In conclusion, expansion is a quick displacement in price movement towards an area of liquidity. Price expansion sets an opportunity for making money in the marketplace. When price expands, it could either reverse, retrace, or consolidate. Price always expands after a consolidation. Do not chase price expansion. A trade setup is formed when you combine a price expansion with another block as a reference point. Other blocks will be discussed in the subsequent lectures to come. Now, I want to give you a task like I always do for you to go to your chart. Now, all these tasks I'm giving is to encourage you to go to your chart because it's in the chart that the miracle happens. Even if I give you 100 examples, you will not still get the requisite skill in implementing these concepts. So I want you to go to your chart, mark out areas of price expansion, and study what price does after expanding. Does it return back to its origin and sets up another leg after displacing, or it keeps moving higher or lower? What are the characteristics of each scenario? If it returns back to its origin, at what point does it find support or resistance? Now you can do this with your favorite pair and whatever time frame of your choice. And if you have any question, you can do well to share it in the discussion group. So, and as always, I wish you a good luck and good trading.